Can newly elected official hire anyone as his or her first deputy, even if that person is a relative? Can they hire a third or fourth deputy that is related to the first deputy? If the person is a relative as defined under IC 36-1-20.2-8, and let me see, that's okay, I'll do this, which defines a relative as a spouse, a parent or a step-parent, a child or stepchild, a brother, sister, stepbrother or stepsister, a niece or nephew, an aunt or uncle, a daughter-in-law or son-in-law, and or adopted child. And then this statute under IC 36-1-20.2-10 provides that individuals who are relatives may not be employed by a unit in a position that results in one relative being in the direct line of supervision of the other relative. Direct line of supervision is defined as an elected officer or employee who is in a position to affect the terms and conditions of another individual's employment, including making decisions about work, assignments, compensation, grievances, advancements, or performance evaluation. You should consult with your county attorney to determine if these positions and associated duties violates the statute or county policy, which may be more stringent than the county statute. Our July 2012 bulletin offers our position on this statute for all the many clauses, and also included are some commonly asked questions with answers that, while not our audit positions, may assist your attorney in this, because it is a very legal matter, and you don't want to get somebody started in a position when you find out that that's not appropriate. Can counties require an administrative fee for handling grants? What is the Indiana code for this requirement if we can, since so much time is spent on these grants? And you do spend a lot of time on this, and it is important to, at least for the annual report, get the information in there correctly. Many counties are already receive reimbursement for these costs through their indirect cost plans. It is rare that we see a grant budget that provides for an administrative fee related to a specific grant. And administrative fees or costs associated with a specific federal or state grant would need to be included in the grant budget as approved by the grantor agency. Since the grant agreement determines the allowable expenses related to a specific grant, the Indiana Code will not address this question. I'm running for re-election. My mother has worked for me from prior to July 1, 2012, so she was grandfathered in under the nepotism laws. Will she be able to retain her position with my office if I am re-elected? Yes, she would, as long as she has not had a break in employment per IC 36-1-20.2-2. Does the Plat Book Fund require appropriation? Yes. Per IC 36-2-5-2, the county fiscal body shall appropriate money to be paid out of the county treasury, and money may be paid out of the treasury only under an appropriation made by the fiscal body, except as otherwise provided by law. So if there's a specific statute, like with the Recorder's Perpetuation Fund, which specifically says no appropriation, that's the only time. IC 36-2-9-18, which is the authority allowing for this fund, does not specifically allow for unappropriated. And how may the Plat Book funds be used? Again, it's under IC 36-2-9-18. The funds should be used for maintaining the plat books. Can the plat book be recreated in Excel? This form, and this is per IC 6-1.1-5-1, is prescribed by the DLGF, and so they really need to be consulted about that, and I'll forward this question on to them. Can funds which have balances but have not been used for several years be closed, and what is the procedure? Inactive or dormant funds should be researched to determine where remaining balances should go. IC 5-1-13-2 provides guidance on balances from bond issuances. If it's a grantor agency, our grantor agencies should be contacted for instructions regarding balances remaining in any fund that has grant funds. IC 36-1-8-5 is a general law which provides that unused and unencumbered balances in county funds which have been raised by levy on all the taxable property of the county be transferred to the general fund or rainy day fund. And then if we get into a situation if after reasonable research a determination cannot be made of a funding source, the remaining balance should be transferred to the general fund. Can the auditor make a mandatory payroll direct deposit decision, or does it have to be a policy in writing? Examples, personnel policy, commissioner's ordinance, or resolutions. IC 36-1-3 provides commissioners with home rule powers when there is not a specific statute. While some counties have adopted some policies, it really, in regard to this, it becomes a legal matter to determine if you can enforce such policy. You should work with your commissioners and your county attorney to determine your authority. Who has authority to terminate solid waste management district employees? IC 13-21-3-12, subsection 15, lists powers of the district, so that has some consideration. However, we recommend that you consult the unit's attorney and personnel policies when questions arise regarding the termination of employment. What is the Indiana code for charging copies made as well as maps for the public? Under IC 5-14-3-8, subsection D, the fiscal body of the public agency, if shall establish a fee schedule for the certification or copying of documents. The fee for certification documents may not exceed $5. The fee for copying documents may not exceed the greater of 10 cents per page for copies that are not colored copies, or 25 cents per page for color copies, or the actual cost to the agency of copying the document. And actual cost means the cost of paper and the per page cost for use of the copying equipment, and does not include labor costs or overhead. And then for the maps, a public agency may charge a fee uniform to all purchasers for providing an electronic map that is based upon a reasonable percentage of the agency's direct costs of maintaining, updating, and enhancing the electronic map, and for the direct costs of supplying the electronic map in the form required by the purchaser. If the public agency is within a political subdivision having a fiscal body, which you are, the fee is subject to the approval of the fiscal body. And there are certain exclusions that may be had for the fee, including public agency program support, nonprofit activities, journalism, and academic research. The county has Sheriff Pension Trust Fund. However, the service of process fee of $13 was receipted into the county general fund. Do we need to transfer the money from the general fund to the Sheriff Pension Trust for the prior years, and if so, would we make the large contribution to the trustee? Based on the available records you should do a reasonable research to compare the amount contributed to the pension fund with the general fund money with what has been receipted into the general fund with the service of process fees. If more has been contributed than the process fees receipted, then no further contributions with past fees needs to be made. If not, the difference should go to the contribution. And going forward, you should not wait to be billed to pay in the money to the pension trust fund. It's statute that it go over there. When you sell equipment, can the department head say what line item the money goes into at the time the money is collected, or does the transfer in the line item have to be done as an additional appropriation? And they're thinking about insurance refunds where it can, under certain circumstances, go back into the line item. Money received from the sale of equipment is receipted into the fund from which the original purchase was expended from, first of all. Unless the fund is specifically exempt in statute from appropriation, the money will need to be appropriated. Unlike certain types of refunds, such as the insurance that was referred to, there is no statutory provision to exclude receipts from sale of equipment from appropriation. At the end of the year, the county takes up to 10% of the balance of the tax-driven funds. So we did, but then we're told that we could not take from reassessment even though tax-driven fund. Per IC 36-1-8-5.1, subsection A, subsection 2B, the sources of funding for the rainy day fund may include any other funding sources not otherwise prohibited by law. The reassessment fund has specific statutory requirements for expenditures, and by transferring into the rainy day fund, expenditures of those reassessment receipts may not meet the statutory purposes. And of course, you lose the accountability. The clerk gets a paid stipend for election. It's that time of year again. And she is also turning in claims for election board meetings and training and for election board member. Is the clerk supposed to get that in addition to the stipend? Under IC 36-2-7-2 it states the compensation fixed for county officers and employees under Title VI is in full for all government services and in lieu of all fees, per diems, penalties, costs, interest, forfeitures, percentages, commissions, and other remuneration which shall be paid into the county general fund with certain exclusions. Therefore, the county should pay officials and employees what's in the salary ordinance, unless there's another provision. And of course, for the stipend that the clerk is getting, there is one, but that's to that stipend, and that's under IC 3-6-5-9. And that's where the compensation of members and the secretary of the election board shall receive compensation as determined by the fiscal body. The restrictions to adjust services, it's IC 36-2-7-2. Yeah, that's one that we have to commonly refer to. The deputy clerk also put election machine setup as a claim instead of on payroll. Shouldn't that be put on her timesheet and be taxable? Again, we'll refer back to that same statute that is the 36-2-7-2. It's the compensation should be in full. The other thing with this particular person, you need to also look at your personnel policy for maybe working overtime, comp time, that type of thing too. That might be applicable. Are we supposed to be using a bidder's book or record? I have one, but it hasn't been used in many years. And this may have been required, and I say may because I don't know for sure, or prescribed many years ago, but it's no longer. IC 5-22-7-9 sets out the information that needs to be maintained, and as I was talking about yesterday, we have a form in the manual that we suggest be used. What is required of the auditor's office in regards to grants? What information besides the copy of the grant and the cover sheet is the auditor's office required to have? Is the auditor's office responsible for what can or can't be paid from all grants? I love grants. You'll need to have information to complete the grant schedule. This includes things like the CFDA number, the award number, grantor information. Sometimes this is not clear in the grant agreement, or it might not even be provided. Last year, we provided a sheet that lists the information that you need, and that's still on our website. So you might go to last year's meeting materials, and it's a grant agreement checklist that would be useful for you. It's the county as a whole is responsible for paying allowable costs. And usually that falls on the person responsible for implementing the grant. They're, just like with any other expenditure, they're tasked with ensuring that it's an allowable cost. You do, as auditors, still have at least the same responsibilities as you would have for any claim. So, unless somebody's going to put more responsibility on you, which it would be very difficult, I think, for Highway Department to know if they've spent the right amounts on gravel or whatever. Should a full-time employee who does other work other than their salary position on their own time still get perf on that income? Example, a court reporter does a transcript on their own time for another court or public defender's office. It has to go through county payroll since they are an employee. Should the county pay perf for that payment? If the compensation they receive meets the requirements in your perf plan, then yes, you need to contact perf if the plan is not clear about a particular situation. And if perf, when you talk to them, is unclear as to if this person is acting in the capacity of as an employee versus a contractor, you should ask them what standard is used to determine this. And if they're going to use the IRS guidelines, there's a checklist provided under Publication 15 that would assist in that. We were under the impression that the Recorder's Perpetuation Fund had to be appropriated this year. It does not appear to be the case. That is correct. It's still an unappropriated fund, and even if it qualifies to have operating expenditures that the county council approves, it's just an approval for the sufficient funds as what the recorder has requested. So it's a meeting of the minds between those two people. It is not a permission to spend as an appropriation. Oh, yeah. Is there any plans to update the auditor's manual? I got lots of plans. But it is a priority. Don't think that it's not. And we are looking for ways to provide the resources to get this done. We recognize there's many good things in this manual still, but it can get confusing when it comes to the codes and those kinds of references. So we definitely do have that as a priority. Also, how about the forms updated and accessible that are listed in the manual? Again, they kind of go hand in hand with that, but the forms themselves, while referred to in the manual, are updated separately, and they're available through your forms vendor. On the money we collect for the tax deeds, do we put this on the auditor's report of collections? If so, what fund do we receive this into? Yes, we go on to your report of collections. That handout that we provided shows which fees go into which funds, because it's not just one fund. We still recommend that you work with your recorder, at least until things get standardized for your county. Oops. Give us an example of the plan for the Recorder's Perpetuation Fund. Do we need this by July 1, 2014? We talked extensively about this with the recorders and how that they are to develop their plan. And the requirements are provided under IC 36-2-7-10.2. The allowance for operating expenditures through the plan, request statement that is required, the ordinance that needs to be passed by the fiscal body, and the approval by the fiscal body is for the following calendar year. The statute does not have a timeline that all these events are to occur in the preceding year, so you would have your normal limitations like publication and that type of thing. Can it be put on all prescribed forms how long you have to keep that form? How long the forms are kept are per the Public Records Commission and subject to their adoption. Honestly, the lack of resources to coordinate this could really end up with misleading information on forms. It's better to go to their website for the latest information on which forms need to be retired, how long they can be kept, that type of thing. And we've gotten several different topics requests, and I do want to say we appreciate those, and we would really, really like if you would continue to do that. Always feel free to email me if you're like, we haven't heard about a certain topic, or this is a new topic that we've never touched on. We would love to hear from each and every one of you. I mean, it's not like you don't have enough topics that we can't keep you busy all the time, but we do appreciate that, and we will definitely give consideration for those. Can we collect the recording fee at the time of the tax sale? If it is redeemed, can we then refund it? Boy, that would be colossal headache, to say the least. Now you're getting into having accounts receivable payable system to track money received in and what's going to be owed, and you won't necessarily know who the grantee is, because how about if the certificate of sale is sold? But also when I look at the code, the statute is really set up to collect the fees at the time of tax deed issuance. So, again, I don't want to discourage ideas because that's what we need to do to work through this. So, thank you for coming up with that idea, but I do not think that's appropriate. If we are charged with collecting the tax deed recording fees, should there not be a fund established called auditor perpetuation since we are doing the work? There you go. I've heard that idea from you guys before. And it's something you can bring to your ledge committee. You do have to remember, though, that a lot of the fees that are collected by the recorder do go over into the general fund. It doesn't all go into the perpetuation fund. But, hey, talk to your ledge committee. Is there a statute that states a county attorney is paid through payroll or a retainer? No. This would depend on the working relationship you have with your attorney. There are special IRS provisions in regard to attorneys found in Publication 15 on depending on whether they should be subject to the W-2 or a 1099. So they are a little bit different than the average person. Our sheriff purchases 3 vehicles at a time that total less than $120,000. He doesn't invite quotes, just purchases from one dealer who meets state bid on patrol cars. Shouldn't he be inviting quotes from other dealers for the sake of transparency and competition? I've questioned this with him, but he is insistent that he's doing this according to the law. If the sheriff is purchasing under IC 5-22-10, which is the special purchasing methods, it may be done without soliciting bids or proposals. A special purchase must be made with competition as is practical under the circumstances. So it could be that a quote is not appropriate. There must be written determination of the basis for the special purchase under IC 5-22-10-15. A purchase may be made from a person, which would be any kind of entity, who has a contract with a state agency, and the contract requires the person to make available to the political subdivisions. So we wouldn't take exception to not obtaining quotes as long as these requirements are being met in writing. And as I pointed out yesterday, that typically is where the issue comes in, is special purchases are happening, but they're not being done in writing. Is the auditor required to keep the bid, RFP, RFQ, special purchases, registers for the public inspection, or can the departments requesting the bids, et cetera, keep these registers? And we will not take audit exception to the county's policy on who is to maintain these records as long as they are readily available. I'm done. So again, thank you so much for everything. And I look forward to seeing you again soon, talking to you and everything in our auditors conference in October. Thank you.
Good morning. Is Robin Louder in the room? Very good. Can you take this to Robin? You're missing something.
Hold your hand up.
I have less questions than Debbie. She's been the hard worker at this conference, and I've sort of been doing part of my new job and part of my old job, and not doing enough of either, I think, to be successful. My schedule seems to be running me these days, so I really appreciate that she has taken on the biggest part of this conference to make sure that we are prepared for all of you, because it's very important to us that if we call you to come down here for 3 days to get training, that we do the best job we possibly can to give you the things you need and make it a productive time while you're here. And I appreciate those of you who could manage to stay overnight last night and come to the meeting this morning. I know it's not always possible to be away from your offices for an extended period of time, but I hope that this will be a good learning session, although kind of informal and casual, because we need that after 2 days of formal training and taking all our notes. But I do appreciate you being here this morning, and I will get through my part of the questions pretty quickly. The first one, the state E911 board told us that architect fees for a combined dispatch center were not a proper use of the E911 funds, and that our E911 fund should be reimbursed. May this reimbursement come from the public safety LOIT, or rainy day, or CUME courthouse funds. We reviewed the statutes over each of these three. Thank you for giving us which public safety LOIT you were under. And we also looked at the statute for rainy day and for CUME courthouse funds, and with proper appropriation, any of these funds could be used for that purpose of your new dispatch center. We have a city and town that have created TIF districts. We hire someone to do the TIF neutralization. May we deduct the cost of the neutralization from the tax distributions to the cities and towns with the TIF districts. The only deductions that can be made from the tax distributions are those that are authorized by law, and we do not see an authorization to deduct anything on the processing for the incremental tax or including neutralization of the base. Additionally, when you do the TIF neutralization, it is part of the tax collection and settlement process, and that is a function of county government and not any other government. So any cost that's incurred for your TIF neutralization really is a legitimate expense of the county. You've just been lucky that one of the cities was willing to pay for it all this time. Is there a comprehensive list of funds for a county which details what the fund can be used for and how the receipts/revenues are categorized? This is in a couple of different places, but if you look at the State Board of Accounts website, we do provide the chart of accounts information, including the instructions, the fund and account tables for the funds listing, the receipt categories or classifications, and the disbursement classifications, all of those accounts. We also have the fund and account descriptions document that's included there, and those will be updated, as Debbie indicated, for the new legislation. It's in fact done, but I have to coordinate with cities and towns since they're going to a uniform chart here soon. And once that is done, I'll get that updated on the website, and I'll send you an email message that it is up to date. You can pull down the new ones. But that fund and account descriptions document, for the statutory funds, it tells you the statute where you can go to see what goes into funds, as well as the allowable uses of the funds. For those that are not statutory funds, you have a lot of agency type funds, the settlement funds, all of the others. We tried to give you a description of that fund so that you can tell the difference between the portion that the county sheriff gets to use, for example, and where you collect it for law enforcement agencies all over the county in the user fee fund. So we try to show you which ones are used for which purpose there. You can also, when you get to receipt and disbursement classifications for the gateway report, you have to be a little more detailed because we did coordinate those with the DLGF, and different levels of detail are needed on the budget side versus our reporting side. So we made them uniform on the gateway, but the codes are a little bit more detailed than what's in your uniform chart of accounts. So when you use those codes and you need descriptions of what those receipt accounts mean and what those disbursement accounts mean, you look on the gateway itself and use the user guide. if you're in that particular section and you click on the user guide, it goes right to that section of the user guide for the receipt accounts or the disbursement accounts, so you can get that information. So it's not in one place, but it is available for you. Is there a list of funds which require appropriation and the funds which do not require appropriation? The best resource is the County Bulletin. April of 2010, we did this, so that's volume 372, page 6, and it's in an article on when appropriations are not needed, and it provides the guidance on when you do not need appropriation. It does not list all the other funds, so it just lists the exceptions. County commissioners have a credit card that they allow departments to use. Over a course of years, a sizable rewards points balance has accumulated. The county commissioners asked whether they could use the points, which she thought would be credited to the credit card account, to pay for meals at a department head meeting. In regards to redeeming rewards points, we do recommend that you obviously have to get with your credit card company to see what the redemption options are that are available to you and how you go about the redeeming those points. The county may use the points, not a person, not an employee or an official, but the county may use those points for any allowable county purchases, and the county just needs to make sure that they make every attempt that when you redeem the points, you do it in a manner that doesn't circumvent the purchasing process or the claims process to the best of your ability. You're not going to completely be able to control it because it's not money in your bank account, but you are able to use the points and for county purchases. So I guess if food at one of the commissioners' functions is an allowable purchase, which seems like there is somewhat of a business purpose there, if you can get assurance about that, then you can probably use the points for that reason. Do we have to get someone from the treasurer's office when we have cash collections in the auditor's office for tax sale redemptions or cash collections from other offices? You don't really need to get someone from the treasurer's office unless you have that as part of your controls somehow. Really what is required is that the treasurer is the official who's charged with the duties of receiving and depositing funds. This is in the county auditor's manual, and it's still pretty relevant. It's chapter 6, page 17. And the manual then describes the manual quietus process, which can be done manually or with some automated steps, like we talked about yesterday, to maintain that internal control of segregating the duties of them handling the cash coming in from the departments and anything tax related, including redemptions, while you need the documents, remittance documents, to post from. So there will be some instances where some state distributions are still by check, and you can receive payments by mail, and the auditor might get those payments, and you'll have to then deliver the payment to the treasurer. Most of the time, these won't be cash, they'll be checks. We still like to avoid those coming to your office, but it's not possible in every instance to do that. And we don't expect you to, not handle the process. You need to come up with a procedure to comply with the law and also have proper internal controls over your receipting for mail-in payments and those things that are exceptions as well. When any public official pays fees or other collections into the county treasury, so the departments are bringing money in, the remittance must be accompanied by the prescribed or approved report of collections form, and the forms required to be used for the city and town courts when they bring money into your offices, and also the departments are in the auditor's manual, chapter 4. They're by reference, so it is important that those records, to meet the statutory requirements and to make sure you understand how to post in the funds ledger, where these monies are supposed to be posted, that you do get those remittance documents while still having a procedure to make sure that they walk the cash payments or the cash collections over to the treasurer's office for deposit. Real property delinquent taxes follow the property, even if there is a change of ownership and delinquent taxes are not paid. Does the same hold true for business personal property? No, it doesn't. If personal property taxes remain unpaid after November 10th or whatever the due date is in the fall, but prior to August 1st of the succeeding year, the treasurer sends out what's called a demand notice for payment. And they want and it has to be for payment of all the delinquencies, all the penalties and the fees from sending the demand notice. And then if that amount remains unpaid for an additional 60 days after the notice is sent, the treasurer would have the ability to then certify the amount to the clerk as a judgment, and the amount would be then removed from the duplicate, but that's only for personal property tax. The gateway input sheet for federal grants is very unstable. We had instances where the total disbursements for the 4D program were doubled. Additionally, there have been a number of instances where Gateway froze in the middle of the data entry process, losing all of the information. So please consider reviewing this section and making it more stable and user-friendly. We will communicate those issues to our IT department and also to IBRC, who's our vendor for that, the state's vendor for that product, and we will make sure that they understand those concerns, and I appreciate you were very specific in listing the problems you had. Can a county employee serve on the election board, vote, and be paid? IC 3-6-5-3, which is in the election laws, indicates that an elected official or a candidate for an elected office may not serve on the election board, with the exception that the clerk is the secretary to the election board. We talked about that. Debbie talked about their per diem or compensation that they would get for serving on the election board as clerk. We've reviewed the code and don't find any prohibition of county employees other than the elected officers or candidates serving on the board, and we also don't find a prohibition to these members voting. When cross-training in our office occurs, what, if any, positions should not cross over in the auditor's office? Your offices are all a little different, but I tried to be as specific as I could so that to give you a little bit of guidance. We did discuss how effective internal control systems do have proper segregation of duties, and that is just a part of that system. And so the incompatible duties within an auditor's office, usually they will involve the ability to divert an asset to personal benefit and also make adjustments to the records or entries to the records to cover up that diversion or omit that diversion of assets. So one example is that the person working the counter that collects the copy fees and the transfer fees and those things would issue receipts, but they should not have the ability to post the receipts, post any adjustments to the receipts, void or alter a receipt, or prepare the deposits with the treasurer's office. So those are the things that you want to think about, trying to keep the records from the person who has access to the assets. A prosecuting attorney tells the commissioners and the council that his employees fall under the 51st Judicial Circuit and do not have to follow the county handbook. These employees, along with the court employees, all receive county wages, perf, insurance, longevity, etc. Is there really an exception for these individuals? If they do not fall under the county and are not considered county employees, does the auditor have the requirement to sign their paychecks? Do they still get county benefits? I think there might be a little bit of frustration there. We sometimes feel that frustration as well as auditors. We did publish our position in analyzing how judges, prosecuting attorneys, court employees, and prosecuting attorney employees are related to the nepotism statutes or whether those apply. And I think that same analysis holds true when it comes to are they subject to the county employee policies and personnel policies. And so that analysis basically led us to our opinion that Superior Court judges, Circuit Court judges, county prosecuting attorneys, county court employees, or county prosecuting attorney office employees are not included in the definition of a unit, which is counties are a unit because they really are in the law as a separate judicial district. And they also do not fit into the definition of an elected official within that nepotism statute. So they're not subject to nepotism laws. They're not, and we also do not think that they are automatically subject to the county employee handbook or employee personnel policies. However, that means they really have the power to create their own, just like the county creates its employee policies and handbook. They do have that power. We don't tell them they have that all the time, but trust me, Supreme Court does. Supreme Court also will not require them to put it in writing. For audit purposes, we want to know that these people are getting the leave time that they're entitled to, no more, no less, that they're accountable to the public because they're being paid by public funds. So we do want them to put their policies in writing. Many of the judges will say that their court employees are subject to county's policies. Some will say they're subject to all but the ones they don't like, then they'll write their own. But do try to work with your officials that are in your county, because the employees will be the ones that are going to be stuck in a bad place, not knowing where they stand. You know, they have an expectation that they're going to have health insurance and that they're going to have PERF, and I think that the prosecuting attorney also has that expectation, but we don't want to stick them in the middle. So they do need to know where they stand, and so if you can work with the official and the county attorney maybe to kind of come up and say, are you guys, you know, subject to this? And if you're not going to go by this and give me the records I need to post their leave time and post what hours they really did work and how many, you know, pay their PERF contribution and see if they're in the plan, not in the plan, keep them in the health insurance plan, then I need to have whatever your policy is so that I can make sure they get the right compensation, the right withholdings, and the right IRS reporting. So you're entitled to some information because you're running the payroll, but I don't, you know, I think you're joking about signing their paychecks. Maybe not, but well, I wouldn't say we want to go that far. Okay, our specific rules for Title 40 incentive funds on how they are spending the money. Our clerk uses her fund in a responsible manner. Good to hear. But our prosecutor allows his employees to work overtime. It seems like the general fund is funding more than they should. As auditors, you're responsible to audit these claims, and even if it's a payroll voucher, and make sure that it does comply. So the Indiana code that's over the Title 40 incentive funds is IC 31-25-4-23 in this case. The incentive funds, it says the incentive funds are used to supplement rather than take the place of other funds used for the Title 4D program activities. Used for Title 4D program activities, that's the key. So if the payment of overtime that is spent is for time that is spent supplementing Title 4D program activities in the prosecuting attorney's office, then that may be an appropriate use of the 4D monies. You are also not allowed under that federal program to basically reduce your general fund spending by using the incentive monies. So that's the supplant element that federal program just requires it to be that way. So if you take a look at that code, it does give you a little bit of guidance that, but it is pretty open and broad when it comes to what are Title 40 program activities. They're not really defined by statute. Are both the auditor and treasurer to agree on a penalty removal before it is to be removed? And although we really don't put it in those terms when we discuss a penalty being removed, you definitely play a part in it. When I looked at the how you would remove a penalty, it is one of the reasons that you would have a correction of errors form, a 127 CE form. And within the code that is the reason we developed that form, it does require that the county auditor post the correction of errors in the application of penalties after you complete that 127 CE. So you do play a role in that. Of course, the county treasurer also plays a role because they would likely be the ones to bring it to your attention that the penalty was applied in error, because you will not be probably looking at that side of the records. Also, there is removal for the death in the family waiver, and that waiver only requires approval of the county treasurer, but at the same time, the penalty would be probably removed by a 127 CE, so at that time, you will be involved and have the ability to make sure that you, I guess, agree that it should be posted, because you should never post a transaction that you don't think is valid. So there should be some discussions if you don't believe that's valid. Is a new deed or survey required for a property owner to combine parcels? The assessor sent out a notice to property owners to combine parcels. He is sending a form with a short legal and parcel numbers to combine. The auditor's office will take over a year to get all the requests taken care of. I know that in the assessing rules, there are times when they will combine parcels that are owned by the same person for assessing purposes. But there is a statute that talks about the formal transfer of this property to a single parcel. And what that law tells us is that before an owner records a transfer of ownership interest in a parcel of real property that is created after the person became the owner of the real property and is created either from a larger previously existing parcel or a combination of previously existing smaller parcels, the owner must submit the instrument transferring the real property to the county auditor to be entered for taxation. So there needs to be an instrument of transfer, and it should be from the owner, not the assessor. It does not indicate that this is an assessing function. There are some exceptions for Marion County. And also, it goes on and gives you more guidance in this statute. So I will tell you it's Indiana Code 6-1.1-5-5.5. How do we determine where the money goes that is in our county-owned land sale fund? It has been at least 10 years since we had a county-owned land sale, and the money was never distributed at the time of the sale. If you look in the county manual, chapter 10, or your auditor's manual, chapter 14, no, it's a later chapter, 15. The proceeds generated by a sale or rental of property should be receipted into the fund which originally purchased the property unless otherwise provided by statute. It would be our position that if the fund from which the property cannot be determined, then the money should be receipted to the county general fund unless the commissioners home rule the proceeds to another fund. Do keep in mind that there is statutory guidance on distribution of proceeds from the sale of a certificate of sale or a tax deed if the county acquired this property from the tax sale. So you have to distribute those proceeds in a very specific manner, and just putting it back into a fund is not appropriate, or throwing it in the general fund is not appropriate for those types. We have a local ordinance for the prosecutor's deferral fund, but the cash balance is running low, and the pretrial diversion fund has a healthy balance. Our county council wants to know if they can move cash from one fund to another. No, they cannot. These are both statutory funds where the fees for deferral and the fees for diversion have to be in those funds specifically, although they are subject to the exact same disbursement rules. I mean, the same allowable purchases of goods and services are apply to each of those individual funds. So that really the proper process would be to reduce the appropriation in the deferral fund, and then the council would adopt an additional appropriation for a pretrial diversion fund where they actually have an adequate cash balance. Should election workers' wages and reimbursements go through claims or payroll? If a county employee works an election, does it go through payroll? And do election workers follow the same income guidelines of $600 to be used on a 1099? Election workers are very specific in the IRS regulations, and I don't pretend to be an expert on them, but there is a kind of a cheat sheet that the Indiana IRS specialists provided us a while back. I don't believe it has changed since 2007, because this was the same sheet that they used in their presentation the last time that they spoke. And so we have commonly sent that to quite a few people, and we would be glad to send it out to you again if you need it. So maybe we'll just go around and send that out again. But I don't want to confuse you and think that it's something new. It's not new. So if you already have it and you're using it, don't think that it's new when we send it out next week, okay? Because it's not new. But if you need it, because there's some questions, you can use it as a refresher, okay? And it does go over how FICA applies. Election workers that work the election only, if their wages are less than $600 in a calendar year, you don't have to give them a W-2, but it is income to them. If their election wages are equal to or greater than $600 but less than $1,500, then a W-2 is required. And this cheat sheet will go on and tell you which boxes of the W-2 you have to use for that. And then if it's greater than $1,500, you have to use different boxes on the W-2. If the election worker also works for the county as a regular employee, there are provisions for that as well. Their regular wages plus their election wages, if it totals less than $600 in a calendar year, the W-2 is still required either way, but you use different boxes than if they made more than $600 in combined income. And also then there is another $1,500 threshold as well, so you still use different boxes yet. So I will send that information out to you, and you all can use it as a refresher, because I know you get questions, because the clerks do struggle to find poll workers, and a lot of people on fixed incomes are very concerned about getting a W-2 or giving up their Social Security number on a W-9, and so I understand that we have to keep revisiting it. Are tax sale payment plans to be agreed upon by both the auditor and treasurer? And second, are the tax sale payment plans optional? These are different than the regular payment plans, but if a person gets listed on tax sale, one of the ways to get off without paying everything they owe is to enter into one of these tax sale payment plans, and that is per IC 6-1.1-24-1.2. And what it says is that the auditor shall remove a tract or item of real property from the list certified before the tax sale if the county treasurer and the taxpayer agree to a mutually satisfactory arrangement for the payment of the delinquent taxes. It does not involve that the auditor has to approve in any way, but it also does not require that this, that the treasurer has to agree to it. So that does not have to be an option. We do have a contract with our sheriff. We do not have a contract with our sheriff. Our sheriff's salary is set in a salary ordinance at amount equal to 50% of the prosecuting attorney's state-paid salary. Prosecutors receive a one-time bonus this year that is not considered an increase in base salary for computing future salary increases. Is the sheriff entitled to this increase, and will the same base salary provisions apply? Because of what you've stated, even though the dollar amount has been calculated and determined in the salary ordinance, we're assuming that you're paying the sheriff under the provisions of IC 36-2-13-2.8, which is a provision that if your county has a population of not more than 20,000, says that you must pay the sheriff an annual salary that is equal to at least 50% of the annual minimum salary that would be paid by the state to a full-time prosecuting attorney in your county. And this does conflict with the general statute that says that the compensation of an elected officer may not be changed in the year for which it is fixed if you made an increase in that sheriff's pay. But if the county put the amount in the salary ordinance just to document that this is exactly 50% of a full-time prosecutor's pay at the beginning of the year, and then in July, because they're paid on a fiscal year with the state, the prosecutors get this $500 bonus, their compensation was increased. It is compensation, even though it's not base building. So you now are out of compliance with the statute you thought you were following that said you had to pay them at least 50%. So in that case, we do not take exception to you go ahead and alter the amount to be at least 50% of the prosecuting attorney's pay, which means they would get a bit of an increase for the last half of the year if your county attorney agrees that that is the statute you were following. So there's a legal basis for you to give that increase under the more specific statute. But it is confusing because you had set the amount in the salary ordinance, and we would recommend that if you're going to use the percentage of prosecutor's pay, that when it's set at an amount, that say that it is either not an amount, that it is set at 50% of the prosecutor's pay, so you can make those adjustments, or don't put it in the salary ordinance. Maybe put it just in a resolution or an ordinance of the fiscal body that's what it's set at because you're using that statute. Because it is confusing that you put a cap in the salary ordinance, now you're not complying with your salary ordinance, but you also want to comply with the law, and the environment just changed, so now you're out of compliance, you got to come into compliance. So it gets very confusing, and we would say, it might be easiest just to say, in the salary ordinance, we're going to pay 50% of the prosecuting attorney's pay under IC 36-213-2.8. And leave it at that, and we'll be able to calculate it or verify your calculations of it, or just put it in, if it is a dollar amount, put it in a separate ordinance. Keep in mind that as you budget for the next year, prosecutor's pay is based, so if your sheriff is getting a percentage of prosecutor's pay is based on what the judges make. Judges' pay is increased if state employees get a raise. We got a $500 bonus. So, just so you know. But that was not base building. So that you can just anticipate that if you're required to pay at a minimum at least 50% of what a prosecuting attorney's pay is, the council can set it a bit higher so they don't run into this. So they plan for this from the beginning. And you can kind of see how the economy is going and where state employees might be in this, and see how good at forecasting you are. But we don't get huge raises, so keep that in mind. Okay, we are getting there, guys. Hang in there. This was a good question. The C of E form, and this is actually, they said Form 133, which is actually the petition for correction of error. When is it specifically required for business personal property corrections due to the business being closed, penalties applied in error, assessed on the incorrect person or parcel, inaccurate information obtained from a mobile home park, or change of tax mailing address, etc. The County Auditor's Manual, Chapter 9, Section F, as in Frank, talks about certificates of error. The certificates of error in the tax duplicates are to be issued, but it talks first about the 127 CE, because that's the form that you use if you are talking about an error that's in the statute under number 1 through 5. And those errors include the description of real property was an error. This is personal property, so that doesn't apply. The assessment was against the wrong person. Well, we did have that assessed on the incorrect person on this personal property, so that could apply. Taxes on the same property were charged more than one time in the same year. There was a mathematical error in computing the taxes or penalties on the taxes. So penalties applied in error can happen on business personal property tax or just personal property taxes as well. And then 5, was there an error in carrying delinquent taxes forward from one tax duplicate to another? So those are the 5 things that you do a 127 CE on, but you're not necessarily required to have a 133, the petition to correct the error. Numbers 6 through 8 can require the 133. If the tax is based on an assessment made or determined by the DLGF, the county auditor is not to correct an error in 6, 7, or 8 reasons until after the correction is either approved by the DLGF or ordered by the tax court. So items 6, 7, and 8 include the taxes as a matter of law were illegal. There was a mathematical error in computing an assessment, or through an error of omission by any state or county officer, the taxpayer was not given credit for an exemption or deduction permitted by law. So for those reasons, you would, whether it has to be approved by the DLGF or not, you would want to have a Form 133 on file, and then that form has to be authorized by at least 2 of the following officials, which are the township assessor, county assessor, and the county auditor. And then there's provisions if 2 of those officials will not sign off on the 133 form, and there's an appeals process to go through for that. So basically you can either look at Chapter 9, Section F of the County Auditor's Manual, or you can look at IC 6-1.1-15-12.